Hi, this is Johanna Bachman. I run the blog Sociology in My Neighborhood, DC Ward 6, and today I'm going to talk about gentrification in DC. Today is Thursday, May 16th, 2013. A week ago, I gave this talk on gentrification to Rotaract of Washington, D.C., which is a group of 20-year-old and 30-year-old people, professionals in D.C., which is part of the Rotary Club system. So I have a series of slides I'm going to go through. And the first slide I want to point out is the DC Ward slide. And I just want to point out that the Ward 6 is in the lightest color on that map instead of blue wards. Ward 6 is the wards I work in, and that ward is where I live. It includes Southwest DC, and it also includes Capitol Hill and the H Street area. It goes all the way down to the Anacostia River, and it goes over to the west around the mall. Today what I'm going to do is I'm going to talk about some of the current data about DC today. I'm going to define gentrification. I'm going to show you some income maps over time and some racial maps over time, and talk about the consequences of gentrification and about what we might do about the negative aspects of gentrification. So first, the DC data today. The population of Washington, D.C., according to the Census Bureau, is 632,323. Women make up a larger proportion of the D.C. population. The women make up 52.7% of the D.C. population. African Americans make just over 50%. 50.7% of the D.C. population is African American. 42.4% is white. The income levels in the district: the median household income in DC is $61,835. So that's the median household income. That's a little bit different from the median household income in the Washington metropolitan area. That is $107,500. That amount, the Washington metropolitan area median household income, is the amount they use to calculate affordable income, affordable housing. The much higher number takes into account not only the district, but also takes into account the counties surrounding the district, including Fairfax County and Loudoun County, which are some of the wealthiest counties in the nation. So this causes the median household income to be quite high compared to what it is actually in the district, which is just $61,000. Both these numbers are larger than the U.S. median household income, which is about $52,000. So the D.C. area definitely has higher median incomes than the rest of the United States. But we also have a higher poverty rate in D.C. Our poverty rate is 18.2%. The U.S. poverty rate is 14.3%. So we can see that there are quite high household incomes in the district and in the surrounding counties. But we also have quite low incomes as well. One definition of gentrification is the original definition, which came from a sociologist. Originally, it was the replacement of an existing population by a gentry, an affluent this gentry was perceived as affluent middle-class households. So gentrification is a replacement of the existing population with these affluent middle-class households. They're often much smaller households, and this particular movement of this gentry, or this sort of what we might call the minor aristocracy, was something that was understood as happening in the 1950s in London. It also was happening in the 1950s here in DC. More generally, we can say that gentrification is the replacement of lower income residents and businesses that cater to them with higher income residents and businesses that cater to the higher income residents. So we can see that gentrification is the changing of a neighborhood from a lower income neighborhood to a higher income neighborhood. Gentrification in Ward 6 is quite popular actually in the sociological literature. The first waves of gentrification were in the 1950s. Capitol Hill was quite well known for its gentrification. but also Georgetown was gentrifying slightly earlier in the 1930s and 40s. The first wave in Ward 6 on Capitol Hill was the 1950s to the 1970s. This kind of gentrification was characterized by having individual owner-occupiers. These people would be individuals owning a house or maybe owning several houses. They would renovate those houses and then sell some of them. This is some of the beginnings of real estate agents on Capitol Hill, people who began with acquiring a couple houses at a good rate and then selling them after renovating them. The second wave happens in the late 1970s to the late 1980s. This second wave in the late 1970s is much more corporate. There are more actual developers, and there are these public-private partnerships. What happened was in the late 1970s, around the world, there became an influx of money that was available. That was the OPEC countries had accumulated a lot of money through selling oil. The Japanese had a huge amount of money to invest, and they were limited to the Japanese investment market, and they were looking outside of that market to invest large sums of money. And during this time in the late 70s and 80s, people began to talk about how the Japanese were investing in Rockefeller Center in New York City. There were other kinds of investments they were doing around the world, but particularly in the United States. The United States was perceived as a particularly nice place to invest, a stable place, and there was lots of money to be had in this sort of growing Washington, D.C., New York, San Francisco, Chicago, all these places were places where you could make some money through real estate investment. So corporations and developers are increasingly involved in Washington, D.C., as with other global cities around the world. And this was, cities themselves also were having trouble at this time because the U.S. government had decided to not fund cities as much as they had in the past. They decided to cut the urban funding. And so cities also had lost population in the 1950s and 1960s. And so the cities were looking for revenue. And they had New York City around 1975 experienced extreme fiscal crisis. Washington, D.C. was in fiscal crisis, partly caused by the fact that that the pre-Home Rule governments in the 1960s in D.C. had not taken care of the city. So when the new governments came in with Home Rule in 1974, the new government had to actually deal with the city that was not in very good shape. So cities were in fiscal trouble caused by earlier problems and caused by the lack of funding from the federal government. So they were looking for outside money to find investors. So they were started what we see as the movement towards a global urban strategy. Cities going out on the global capital markets, trying to get money invested in their cities. They come into competition with other cities, and they are competing to get this money and also competing to draw in a certain kind of resident, a very wealthy or somewhat wealthy resident. So this is a global urban strategy. We also see that during this time period, this is not necessarily so much in the DC area, but we do see some of it. But in other cities, there's also this gentrification going on that's very post-industrial, a movement away from the industrial sector in many cities. We did have an industrial sector in Washington, D.C. around Foggy Bottom. There was a large natural gas plant, as I understand, power plant, as I understand. There were also along the Anacostia River, some industry down there, and in other locations we have industrial zones. But there was, during this late 1970s to late 1980s, a turning away from industry and trying to create different kinds of cities that were more focused on tourism and entertainment and restaurants and things like that. Another aspect of this turn was embrace of artists also. Artists were encouraged to move into certain areas, and this brought a certain extra cultural capital to these areas because artists were seen as quite, would draw in a certain kind of resident that would like to be in an artsy area. But at the same time, in addition to these kinds of people gentrifying, there was the late 1970s, late 1980s, we see in the Capitol Hill area an increasing number of wealthy professional gentrifiers, people that are not just renovating the house themselves, but they're buying houses that have been renovated earlier, and they're going for quite a large sum of money. The third wave of gentrification occurs from the mid-1990s till today. This third wave is somewhat different because it's less on Capitol Hill area. It's less focused on renovated houses, townhouses, and more on building what we call new build. Taking empty spaces, empty parking lots, or empty industrial areas, such as what we see right in the area to the southeast around the stadium, or parts of Southwest. We see large-scale corporate development in these areas, tall buildings with condos, retail, and creating an entirely new neighborhood. So we see this around the stadium in the southeast area, right along South Capitol. This brings with it yet another wealthier group of gentrifiers. The condos that are for sale are quite expensive, and so we have to bring in new people to be housed in those areas. So we can see that gentrification brings with it not only different kinds of people into the neighborhoods, but it also brings a different kind of neighborhood. And so what we're going to look at first is seeing how the income changes have occurred across DC. This is the first map is of DC, looking only at the people making at the highest end of incomes in the 1950s. You can see in this map that in the 1950s, people with the largest incomes of $10,000 or more are living in Northwest and some areas of Arlington. The area east from North Capitol eastwards does not have these high income groups. So we can see that we can see a dividing line already in the 1950s. However, what we do know is that this distribution of income was actually much more evenly spread out throughout the city in earlier times. Around 1920s or maybe earlier, there were developments of new suburban developments being built all around the Northwest area and in the northern part of the district. So along Georgia Avenue and then throughout the western part of Rock Creek. These developments brought in these certain income groups. And we can see that the wealthy sort of moved to these areas. So that's 1950. We can see that I wasn't able to get the county data that's beyond the district for 1950, but 1960 we can see that there are also very wealthy neighborhoods, very wealthy residents living in not only Northwest and parts of Western Arlington, but also, parts of the Western. Well, you can see within the district lines, you can see the western part of the city has higher income people, and they're spreading out into the suburbs in Virginia and in Maryland. We know that during the 1960s there is an explosion of developments in suburbs across the country, and we can see that wealthy people are moving into those suburbs. If we move to 1970, we see there's continuing large family incomes in the western part of the city still, and off to the northern suburbs. And we can see that there's a large jump in incomes in the 1980 census map. Here we see quite large incomes throughout Northwest and through spilling over into the suburbs. But we also see large incomes happening in other parts of the suburbs as well. 1990, we see what's happening in 1980, actually going back to 1980,